Got quite a few things to cover today, so I'm going to frame things up ahead of the content of the video. But in short, we have taken a bit of a breather from our colossal pullback over the past few days. We're seeing corrective bounces upwards across pretty much all the cryptos. However, I don't think we're out of the woods yet. It still looks like there's further downside ahead. So I'm going to detail that. In this video, I'm going to cover a variety of cryptocurrencies. So be sure to check out the chart links in the description below. I'm also going to have timestamps so that you can skip ahead as needed. That way you can come back and review any high-level strategy or any high-level inflection points that I give you. And of course, the final thing will be I may cover some big picture strategic things about cryptos and getting back into it at the end of this video. If not end of this video, perhaps another video. So the big question is, what has been happening and have we bottomed yet? Well, we're going to start with Bitcoin because it is the biggest cryptocurrency and it is the leading indicator of sentiment just by virtue of its size. And when we look at this thing, we pulled back to a low of right around 33,000, somewhere around there. And on my linear chart, we didn't technically break this support, which sits at 32,768, but we stretched quite a bit to the downside once we look at this thing. So really, at least in this chart, and you're going to see on the log chart in just a second, we've stretched so far down that it seems like the first wave is a bit unlikely. It seems a little too stretched to the downside to just be a first wave of a larger 5-wave pattern down for a C wave, but I'm not going to rule out. It hasn't technically invalidated, and really it also means that technically our second wave, our green pattern is somewhat alive. We're going to look at that in just a second. Right now, the purple is my primary, and that tells us that we have a bit more downside left to go. So shifting to this logarithmic chart, this is the 4-hour chart for Bitcoin. We've had what I'm calling at least part of the C wave to finish our larger wave 4 correction as seen here, and it started in early November of 2021, and we've pulled back pretty sharply. We had our initial warning shot fired on December 3rd. We had a nice corrective bounce, and then we've pulled back pretty strongly. And on the linear chart, or I'm sorry, the logarithmic chart, you can see that we broke right through support. Based on what I was calling the first wave, we shouldn't break below the 2.0 extension of that in anything, let alone a corrective wave. So in this chart especially, it looks like our first wave, well, this is too long, too deep to be a first wave. It makes more sense to see this December 3rd spike down as our actual first wave, and that is what the purple pattern is conveying here. It tells us that that was a first wave, we had a second wave bounce, and we're in the midst of a third wave. And this may or may not be an ending diagonal form. The telltale sign of that would be that we have 3-wave subwaves within this, and we can interpret the first wave as a 3-wave correction, second wave as that, and then possibly the third wave as well. It's not totally clear yet. The other hallmark of a diagonal structure would be that our wave 4 bounce would get back above where the bottom of our first wave was. So if we saw some kind of a bounce, get up past 42,000, right up in this range, that'd be a strong indication that it is a 4th wave. In addition, you'd expect to see a zigzag corrective wave up. If we see a 5-wave impulse, that would be a strong indication that our bottom is already here. So again, in short, purple remains primary, and technically the green pattern isn't dead, but it doesn't technically invalidate until we descend below the original origin of what we would be calling the green first wave. That put us right around 28,566, something like that. So again, really, if our green pattern is the motive pattern of choice, it wouldn't really make much sense to hold through this correction. So I don't know if you should sell now. I did get out earlier, but it really doesn't make much difference from a practical perspective. Bigger picture, how much lower do I think we could go? Well, as I mentioned, this looked like an incomplete pattern on the big picture. We have basically our larger third wave structure here, and we have a big support right around the 24,000 mark, and it's actually better reflected in my other big picture logarithmic chart. Since we hit just about the 1.618 extension for what I was calling the larger third wave, our support sits at right around 24,431. So based on that, we actually have quite a bit of room left to the downside, especially with the latest bounce. We're sitting around 38,000. And well, the way this thing projects, it is definitely it's a valid target range for what I'm calling ending diagonal. So possible for us to go a little bit lower for Bitcoin. Now I'm going to shift over to Ethereum, which is the other big cryptocurrency. It's the second largest, so it is another really good indicator of sentiment. And we've seen very similar action. Now, Ethereum has torn down much more aggressively than Bitcoin. We are currently seeing what looks like a three-wave corrective bounce. Is this the entire bounce, or is there more to come? It's not totally clear yet, but as I mentioned right here, it's red pattern primary. If we break support, and we definitely broke the support here, this will make more sense on the bigger picture chart. So this is the log chart, of course, on the 4-hour interval. And same story as Bitcoin. It looks like this giant leg of this correction, it looks too big to be a first wave down for a red pattern, but it hasn't validated. So this very well could just be the first wave. And we may see a powerful bounce in an ABC form. And this was our gentleman's exit point. That's what I was calling it. But right now, I don't see that as a very high possibility right now. I'm leaning towards purple as my primary pattern. And just like with Bitcoin, we have this green pattern that hasn't been validated yet. And it actually looks way more credible on the Ethereum chart just because you have a 1, 2, 3, 4, 5 pattern. The proportions kind of work. It has the right look. And this could be interpreted as an A, B, C down as depicted. So we may be done bottoming in Ethereum, or at least close to it. It doesn't technically invalidate until we get to 1710. So that's an important level to look for, because that is, again, the low that we hit in the summer. And when you have really powerful pullbacks like this, especially in the fourth wave, sometimes you don't see us going back down lower and more of a standard C wave as we see in purple. That 1700 mark may just serve as a floor. We may not go down any lower. It's basically a kind of a textbook Elliott wave flat correction. Sometimes your A wave goes about as deep as the C wave a little later. And in this case, we had a very strong expanded B wave flat, which allowed us to hit an all-time high, both in Bitcoin and Ethereum. So we're going to see how this thing progresses. But if I had to make a bet, I think we're going to go a bit lower. How low can we go? Well, 1700 is a key level. We've hit as low as 21, was it 2175, somewhere in that range. If we see a 5-wave impulse up, that would be a very clear warning that, hey, our correction's done. And, if you're planning to get back in, good time to get back in. As I mentioned, I did exit my positions. For me, my cost average for one of my tranches was right around 1700, bought the dip there. There's some other tranches I bought later on with higher cost averages, so I kind of unloaded as I went. At this point, wouldn't be a bad time to attempt to buy if you really have a strong feeling that it's going to go back up. Other than that, though, purple is primary. I have these diagonal trend channel lines drawn. I would expect our fourth wave to go up, and it would stay within this channel trend line. So this thing's targeting around 3,000. If I had to give you a number that it may go and hit, well, based on the extensions we're seeing and all that, yeah, probably the 1.0 would be a good support point for a fourth wave within this purple pattern before we have one final crash. How low could that go? Well, just like with Bitcoin, we do have a strong support based on Elliott wave Fibonacci pinball right at 1151. And well, that would be a long way down. I'm not fully confident that we're going to go down that far, but it's possible. Again, that 1700 low that we hit in the summer is a strong support, or in this case, a resistance because of the movement going down. That's the primary direction. So that is Ethereum. Both Bitcoin and Ethereum are giving us hints that we may see a bit of a bounce before we finish more downside. So that brings me to EOS, which I covered it in recent days. And EOS has pretty full looking pattern itself. We invalidated what we were calling our green, more bullish alternative pattern. And well, it looks like we're finishing an ending diagonal fashion in EOS, which we may go lower on. This looks a lot more clear on our big picture chart with EOS, in which we actually hit our target box for the downside here. So based on our A wave, or well, it was a W wave, but based on the A wave that we have here and the B wave up, our 1.0 falls within this purple box, and we're actually in it at the moment. There's multiple confluences, so there's a chance that we are done with our correction EOS, waiting to see a bit more of an MACD divergence. Actually, we're already seeing it. I mentioned this in the video update the other day, but we're not as oversold as we had been on December 3rd. So that's a positive sign of bottoming. So again, if I had to make a call here, I think we're going to go a little bit lower, maybe a bit deeper into the box, but I can't see us going too much lower. In addition, there's another technical level of significance in EOS. We're kind of between a rock and a hard place here. This is a major support right at 128. Do not want to break that. We break that, maybe in some really big trouble for EOS. Fortunately, we're not seeing this in most other cryptos, just EOS. We're getting a little close for this thing to invalidate the entire structure we had up here. So in short, from this origin point to the top of what I'm calling this wave one, that's one impulse or one motive wave. And our second wave cannot retrace this whole thing. So if that retraces past that, then this entire thing is invalidated, may spell some pretty nasty action in the near future. I'm going to move on to XLM now. And with this thing, similar story, we're having a corrective bounce, and we invalidated a few things with our latest pullbacks. We had a significant support level at, what was that, 19.9 cents. We peaked a little bit below that, and we have what looks like a corrective bounce at the moment. So this thing looks like it could go a bit lower. And I'm actually going to shift this thing to the big picture again, just to make it a bit more clear on XLM. Here, we have what we're calling A wave down for red, B wave up, and a red wave down. Our green pattern invalidated because we've pulled back below the point of origin of what we were calling the origin point of the first wave. So that pattern is dead. That will come off the chart. Red is primary based on the proportions of this A wave to the forthcoming C wave. I'd expect us to land somewhere within this pink peach colored box. And that is a strong expectation. The alternate pattern is that we're either done or we're very close to it. There is a resistance level right at about 0.148. And again, there's some confluences there. If we break through that, that's the 0.764 extension of this larger AB structure. We're very likely heading into this box. Otherwise, we may see a strong reversal, 5-wave pattern up. And unlike with EOS, we're nowhere near our stronger resistance at the bottom. So again, may have a good buying opportunity coming up, but I do fully expect this thing to land inside this pink box. Now, moving on to our next crypto, which is Dash Coin or Dash or whatever you want to call it. I saw some insults going back and forth in the comment section over Dash being a trash coin, but I always counter with, well, every crypto crashed. So does that mean every crypto is trash? So did the stock market. Maybe the whole stock market is trash too. I don't know. I'll stop being snarky now. So when we look at Dash Coin, we have two patterns that were in operation. There is a chance that we are done with our correction, but like with EOS and XLM, our bullish green pattern has invalidated. It'll become more clear on the big picture chart. We're having less of a bounce in Dash, so we're very likely still in our primary red pattern. So shifting to our big picture logarithmic chart, this thick red line here, I'm going to shrink this down a little bit, expand it, was the origin point of what we work on the first wave for our orange primary pattern. That got invalidated because we fell right through that. That level was at about 102.17, something like that. We broke down through it. We went as far down as $80.58. So the orange pattern is dead. That will be coming off the chart probably around the next Dash Coin update. So the red is primary, and that tells us that we've just finished the third wave down of our larger C wave. And Dash is a little bit different from most of the other cryptos. We didn't have a higher high back in early November. It looks like our correction really started from August, and it fills out really nicely as a pretty good textbook looking 5-wave pattern. You have 1, 2, 3, 4, 5. Even the subdivisions within, you see this 1, 2, 3, 4, 5. That fits. It looks like even the third subwave was an impulse. So this is the most textbook looking pullback we're seeing so far. And there's a strong possibility that if our A wave equals our C wave in length and depth, and we're going to hit somewhere around $61. So I have a hard resistance there. Shouldn't break through that. We may stop a little short around 65, but that would be my full expectation. And but not before we have a bounce. So again, we're in a subwave 3. I expect a pretty good bounce. I wouldn't expect our fourth wave to intersect or overlap our first wave because I do see this as more of a standard impulsive pattern based on the proportions we're seeing. So I wouldn't expect as much of a bounce in Dash Coin, and we haven't seen as much of one so far. So that could be a harbinger of things to come. The alternate pattern is that we're getting close because we're so oversold. We may be done with our correction or very close to it. That's what the green pattern would be. It means that we would see a little lower or no lower than we've already seen, and we'd see a pretty quick rally, not directly into this box, but we'd see a small 5-wave pattern, 3 waves back, and then eventually we work our way into that box. So keep your eyes peeled. And just another hint, Dash, because it seems to be an early indicator of trouble ahead, it may be an early indicator of the light at the end of the tunnel. So keep your eye on Dash. They're making updates on it. Learning that altcoins sometimes lead our OG cryptos with shifts in sentiment. So now I'm going to shift over to Chainlink, which I haven't done an update on in a little bit. We've had some things break and invalidate here too. I think I wrote down here that green is now primary. Really, we actually hit our support perfectly and bounced back up. So if I had to give you my opinion, we're 50-50 here. I'm not sure if we're green or red. There are arguments to be made for both, but you can see for yourself, we hit our support. And the significance of that support, I'm going to make clear on the big picture chart in just a second. But right now, the two alternatives are that we're getting close to well, close is relative. We may have a lower low to come in Dash, or I'm sorry, in Chainlink, or we may be done. We're about to turn back around. If we do break this red pattern, the green is dead. So with that in mind, Chainlink's big picture pattern, here's why the green pattern is almost dead. We had our pullback, which I had been calling a wave to, and then this was supposed to be another one ABC, maybe a flat correction, expanded flat. Well, just like I keep repeating over and over, you cannot retrace more than 100% of your first wave. So our origin point sits right at 1339. I believe that's what the support is, and we hit it perfectly. So we have a bit of a double bottom situation. Double bottoms are tricky in Elliott wave analysis because they're ambiguous. You're not sure if it's an A, B, C, or if it's you know, like maybe a wave 2 and then a smaller degree 1, 2, or even maybe a third, fourth, and a fifth. If you're coming from the other direction, there's just a lot of ambiguity, so it's very unclear which one it is. So just because the green was primary before, it remains my primary by default. But if you have to ask me personally, I'm completely 50-50. I may be leaning towards the red pattern, and the red pattern would have us go into this box, and that box gives us, well, there's multiple confluences there based on this A wave. If this is an A wave, our 1-to-1 would fall right at the top of this box around 971. So that'd be quite a descent from where we are right now, which is about 1522. If you want to get out now to protect yourself from that, wouldn't be a bad place to get out, because that is quite a bit of downside. And we could go much lower because standard Fibonacci extensions fall as low as $7, maybe even down to $5.74. All of those are options here. Point is, until we break the 1355 support, I think I misspoke earlier, 1355, 1339, one of those is support. If we break that, very likely we're going to head in that box. And then again, just like with all the other cryptos, we see a 5-wave bounce back to give us any signs that it is over. Polygon, it's another one I haven't updated in a little while. It's trying to get me to color this thing. So on Polygon, this is a little bit more tricky because we were doing very well in Polygon. I mentioned that Polygon was the only reason why my portfolio didn't get completely wiped out with the latest pullback. So we've invalidated what I was calling a diagonal. I was looking at this as maybe a 1, 2, 3, 4, and then, well, we fell to the bottom of the channel trend line. It's more clear on the big picture chart. So the purple primary is technically, well, not technically invalidated, but based on my analysis, it's invalidated. So we have this blue alternate pattern. I'm going to shift to the big picture where it makes a bit more sense what I'm getting at. So this whole pattern was looking for maybe a 1, 2, and then possibly an ending diagonal. Maybe we'd expect to see a bigger C wave, maybe be something else, maybe a 5th wave extension of this one, what I was calling a 1, 2, maybe this is the top of 3. Lots of possibilities, but point is we fell through our channel trend line. So in my mind, purple is done because we broke the channel trend line. In addition, we've broken down below what we were calling the origin, the bottom of the 2nd wave. So that's a bit more technical reason why the purple is invalidated. The blue primary is still technically intact. Got to find another adverb other than technically, and that's because this whole thing could be possibly a leading diagonal 1st wave, and then we have a perfect 3-wave zigzag. As you can see here, you see an A, B, C in small picture, and it follows appropriate Fibonacci proportions. We hit the 1.382 extension of what I was calling A wave almost perfectly. We're quite oversold. We're seeing the MACD turn around, so we may be done with our correction. We may have a little lower to go. There's some confluence right around the 118 to 125 mark. A couple of Fibonacci support levels there. There's a chance we just bottom about there and turn back around. If that happens, that would bode very bullish for Polygon, because again, our midsummer low in July was around 60 cents, and we're nowhere near that right now. So there's a good chance that Polygon could be another one of those early moving cryptocurrencies that may start taking off before we're even done with the correction some of the other cryptos. If we do break down below, what is it, $1 was my support, very good chance that we're going with the red. It doesn't necessarily mean that the blue pattern is invalidated, because that won't technically invalidate until we get to this low that we hit in midsummer, which was again around 62 cents. But by then, makes no difference whether you which pattern you're following. You're going to take a lot of losses if you hold through that correction. So that is Polygon. I'm going to move on to Litecoin next. And with Litecoin, we've had, again, same kind of thing. We've had some invalidations happen. We actually broke our our support at 104.05, which opens the door to slightly lower lows. Once we shift to the big picture, it'll make a bit more sense here. So let me do that real quick. All right, so again, daily logarithmic chart. Now, the significance of 104-ish, that support region, just like with Bitcoin, Ethereum, some of the other altcoins, is that marks the low that we hit in the summer. And therefore, any bullish action that we saw is now invalidated. This can no longer be considered an impulse or a leading diagonal, nothing like that. So this is definitely a B wave. We may or may not be done with our C wave down. And that is basically the patterns that we have left at the moment. I actually have a couple of different patterns here because of, well, I was going to say that the C wave shouldn't be there anymore. The screen will come off. So our red pattern calls for us directly dropping to what would be the one-to-one extension of this AB, the 1.0 extension. That would fall right around $76. Then we have a sharp reversal after that. That's the red pattern. That is actually my primary at the moment. I don't think we're going to go as low as the purple pattern shows. However, the market does what the market wants. So the purple sees this whole drop here down to December 3rd as a first wave. This has a very shallow, non-standard second wave, and we have much, much lower to go if we're falling purple. Again, that becomes primary if we break down below 74. Although there is argument to be made that we could go as low as 55 or 45 before we've totally invalidated the red pattern. There is, of course, that very strong resistance zone down below. I'm going to actually embolden it, if that's the right word, right at 25.28. Just like with EOS, if we got that low, we'd start getting uncomfortably close to the origin point of this entire structure. That was in March of 2020. That was the everything crash. Do not want to get anywhere near that because that would be a huge problem, technically speaking. So that is where we are with Litecoin. I'm going to go shift to Solana. Solana was one of the more bullish cryptocurrencies that we've been tracking. It exploded while even during the pullbacks of some of the other cryptos, we didn't see much bearish action in Solana, but we started to give up the ghost in Solana as well. But there are signs we may be getting close to a bottom. It's not as clear what's going on in the short-term picture, but in the big-term picture, I've added a couple of symbols here. So this pattern looks nothing like any of the other cryptos we're following. As a matter of fact, it looks like we had our larger five-wave structures peak at right around peak in November. So again, very different pattern, looks completely different. We do have what looks like a three-wave correction from that top. So if this is the top, and you have what looks like it could be a leading diagonal down, that's an A, that's a B, that's a C, tells us that we're either done with our C wave or getting close. So I placed the larger wave 2 at this point here. And based on the extension of what I'm calling AB, we should fall somewhere between 113 and 78. And we've actually broken that 1.32 extension. We actually almost got to the 1.61 extension. So that tells me that we're very close to done if that is the pattern to be believed. But there's no telling where we're going to go. I personally don't see too much more downside in Solana. So expect a bit more of a drop before we turn back around. I'll have more details on this particular crypto relatively soon. But again, because it's following a completely different pattern, I can't see this thing having too much more downside left. Now, if we did break down below maybe the $62 mark, we may be well on our way to about 1936. That's the support of what I'm calling the smaller degree fourth wave for Solana. Moving on to Polkadot, that's another crypto I haven't done an update on in a while. This one's a lot simpler. It's following a very unique pattern of its own, and we've actually invalidated a few things, but not technically invalidated. So let me explain. On our big picture logarithmic chart, we had our green pattern as primary, and that is based on the fact that this is a larger five-wave structure and impulse. We had a perfect three-wave pullback, I was calling wave 2, and then it looked like we had a subwave 1 and a subwave 2, basically a smaller degree impulse. It has all the proportions, it's got the look, everything, although there isn't really a clear 1-2 here. It looks like we've had a corrective three-wave pullback since. Issue here is that the green pattern doesn't technically invalidate until we break below our low that we hit in the summer, just like with a lot of the other cryptos, 1036. By that point, there's not much of a practical difference between green and red. So really, it's not over until it's over. We need to see a quick reversal and a five-wave impulse for us to be comfortable. So for that reason, I'm making the red pattern primary, but never say never. If we don't come all the way down to this level or if we don't invalidate that, green very well might be the pattern that is in operation, the primary pattern. And I think I put the support at 1042, but 1036, 1042, right in that range. If we break that, very good chance based on one-to-one equivalents. Actually, it's not one-to-one equivalents. It would be, we'd be seeing this entire thing as a C wave down. So this whole thing would be an impulse. We'd fall somewhere between 836, 739, maybe down to $6.05, something like that. So it could get really ugly. As a matter of fact, we may be down to 1/3 of the value that it is now. From $18 to $6 would not be pretty to go down through that kind of a pullback. And our final crypto that I'm going to cover in today's session is Shiba Inu. Shiba Inu, I don't know where we place the stress on that. We had been waiting for a pullback in SHIB to buy the dip, and buy the dip we did. We've had numerous dips, and the way this structure looks like to me is that this big spike down, I think that was, yeah, it was on December 3rd, coincided with a lot of other spike downs that we saw. Either that or the continuation of that. Either of those could be seen as basically an A wave down. And I've got two different patterns here. Based on that, you'd expect the 1.0 extension of our AB to be the termination point of where that is. So based on that, if this level right around here is our A wave and we have had a bounce in our B wave, sorry about that, let me relabel this to make it more clear, then our C wave should in theory land somewhere around here between the 1.0 and the 1.618. We actually almost touched the 1.32 extension. So that tells me that we shouldn't have too much downside left in SHIB. And we actually see an MACD divergence. You can see how we've had a bit of a bounce. We're not as oversold as we had been in November. There's just some signs. However, there's not that much room between here and, well, the origin of the entire impulsive pattern. So really, this is one of those lotto call cryptos. There's colossal upside, but there's a chance this goes to absolutely nothing. And well, call it what it is. It is a meme coin, and it's called that for a reason. For me, it's just really a lotto play, if nothing else. So I don't take it that seriously as a legit crypto, and neither should you. But again, the sentiment moves together. All the cryptos move together, and we're going to see if we see a bit of a reversal. So that is my top-down summary of all the altcoins we're looking at. Once again, we have enough in place for the patterns to be complete for the most part. We may be done with our correction. We may be getting close. However, there is reason to believe we may sink a bit lower, maybe significantly lower in something like Ethereum, for example. Number one rule is you want to see a 5-wave impulse up and a 3-wave correction down. That is your first sign that we're about to rally again. I'm going to be making updates regularly about this, so don't forget to subscribe to my videos for that. And if you enjoyed my video, don't forget to like. Till next time, thank you for watching and happy trading.